Okay, so we have a visitor for the first time ever. So we do market stats, real estate market stats every single month, but there's a big topic now in Southeast Idaho, and it is the rental market. So we have a special guest, Jake. Come on in. Jake Durchie is owner of Jacob Grant. Come on in.
Oh, get on stage,
you click through your things. This is what you got coming up. So I just want to mention really quick, Jake, who is, by the way, the owner of the beautiful deck here that has always let us come, which is fantastic. And he's been amazing. And we send all of our clients to Jake. If you need property management, Jacob Grant Property Management is amazing.
He manages our property.
That's right. And just a little mention, I realize here, just so you know, so Jake, you've been investing in over 15 years in Idaho Falls. I pulled this all off his website. He doesn't know I'm saying it. And he's previously served as president of Eastern Idaho Apartment Association. You continue to work as an active broker here in Idaho Falls and is a certified property manager by the Institute of Real Estate Management. And you direct $187 million of residential real estate. You are impressive.
Oh.
You're impressive. Okay. All right, Jake. Jake's going to talk us through a couple stats and give us a little idea of what's going on in the rental market.
Perfect.
So take it away.
Okay, so as you guys probably know, rentals are going up. And so we've seen a huge decline in properties available compared to who wants to rent places out. And so what we've seen is because the supply is so low compared to the demand, rents have increased. You guys probably have all seen this. Over the last 3 years, we've seen rents increase about 9% per year. That is continuing on this year. Right now, as you probably know, there's a whole bunch of new construction. And so we expect that to shift and to change over the next 12 to 24 months. But right now, we're continuing to see a 9% increase. Average square footage, basically when we look at rents, we say, all right, how much is a rent per square foot? Again, it's increased substantially. And so if you look at the average one bedrooms, they've gone up substantially. 2 bedrooms, 3 bedrooms, everything has gone up.
So what that says is 3 bedroom is about $1,300 a month for a 3-bedroom apartment.
This is last year's data, so it's increased about another 10% since then. And even, if you go look at some of the townhomes back behind Starbucks over on Jenny Lee, those ones are going to be at the $1,700 to $1,800 range. So that's a 3-bedroom, 1-car garage, about $1,350 on the square footage. And those are renting for $1,600 to $1,700.
And those are brand new.
Those are brand new.
Yeah.
Yep. So if you look at that rental price, you're looking at over $1 a foot. Which again, if you look at 2 years ago, we were 80 cents a foot or so. Usually you're going to get a little higher rent per square foot on a 1-bedroom or a studio compared to a 3-bedroom or a house. Okay, this is that average square footage. So in the research that we did last year, we basically just looked at a random sample of apartments that are available, rented out apartments, and that's where the data came from.
Jay, can I ask a question?
Yep.
How much more expensive is it to rent a 3-bedroom home versus a 3-bedroom apartment?
It really depends on the age, but if you're looking at a 3-bedroom, let's say we're comparing brand new to brand new, 3-bedroom home is going to be somewhere in the area of $2,000 to $2,200. A 3-bedroom townhome is going to be more like, that $1,600 to $1,700 range. So they're pushing up to about $1.50 a foot. Another interesting thing is I think Jessica, you were telling me that the prices have increased in the last year about 28%.
Mm-hmm.
I don't know if you see that top number up there, and that's over a 3-year period. But
27.
It's just really similar numbers. It's over a longer period of time, so the rents are coming up kind of behind the values.
Is that because of lease terms? You can't really.
Some of it's lost to lease, exactly what you're talking about, but there's also just a lag, it seems like.
Just a lag, yeah.
And as when properties are cheaper, interest rates are lower, it costs you less to get the same type of house versus rents, on the other hand, you can continue to get a little bit nicer place. So since the last 3 years, interest rates have been so low, it's kept those rents down a little bit. It seems like they've gone up a ton, but they really haven't kept up with the price of houses to buy. And that's probably going to flip-flop a little bit.
I don't want to make you go backwards, but is there a diminishing return on square footage to dollar per square foot? If I have an 8,000 square foot house, I probably can't get $1.50 a foot.
Correct.
So where does it start to?
Where's the sweet spot?
Yeah, the sweet spot. That's what I'm looking for.
So the market has shifted, as you know, again. But when we had lots of people that got flipped upside down in 2008, it was a different point than it is now. Mm-hmm. So when that happened, we had a whole bunch of renters or new landlords. We called them accidental landlords, people that did not want to be landlords. And they became landlords, and so we had this flood of single-family homes on the rental market compared to what we had before. Now, since the market's kind of corrected, all of those people that don't want to be landlords are no longer landlords. And so we have a huge shortage for those types of properties. And so the flip-flop point used to be kind of $1,800 on rent and, about a $300,000 house. And now I feel like it's more like $400,000 to $500,000 house and about $33,000 to $3,200 on rents. So it's shifting.
Yeah, it's quite a bit.
With the increase in the rent going up every year, and you're seeing just kind of everything go up, are you seeing tenants trying to stay in their rentals longer, like you're doing longer terms and trying to not leave and lock in, things like that?
Yeah, people want to stay longer. I think we're seeing less turnover, but there's also a whole bunch more supply that's coming online. Mm-hmm. And it really hasn't come yet. We've seen a slow increase, but that's accelerating. Mm-hmm. So we have one builder that's come into town that wants to build 1,000 units. That's one builder. We have, it's becoming kind of a nationally, the nation has their eyeball on us right now. Mm-hmm. And as far as national builders and things like that, I've been talking to people from other places where that hasn't been as much. I haven't seen that as much in the past. So people that want to build, I want to come over and build 50 units. I want to come over and build 300 units. And it's only to rent out. So as that happens, I expect to see vacancy kind of creep. I expect to see rents to kind of stabilize.
With and Jess, correct me if I'm wrong, when we went to the realtor luncheon, I believe they said there was a meeting about community development that they're going to add 2,000 doors.
They've got like 2,000. They're expecting about 2,000 permits to issue this year when they normally end up like 400, and they're at like 2,000.
I haven't tracked this year's, but absolutely.
And you're seeing a lot of people wanting to build rental properties, not necessarily to sell. They're going to hold them.
Yeah, so lots of that has to do with like the bigger economic picture. So with inflation super high, one thing that holds its value when the dollar does not is real estate. And so,
could you say that louder?
Yes, I agree. When the dollar, if you had $100,000 last year and that same $100,000 was sitting in the bank, this year it's worth, $75,000? The nation tells us it's 9%, right? But I don't know if it feels like this to you guys, but it feels like a lot more.
Yeah.
And so if you have that same piece of property or that same $100,000 locked in property, that same piece of property is going to hold its value.
Boy, that's a good point. When you're talking the new stuff is going to come in and supply will go up and you may see vacancies increase, what happens to all the existing homes and maybe the more affordable end of things under $1,000? Are those going to be in more demand now because they're more affordable, or what happens with that lower end?
I can speak to you about the last 20 years, but that's it. I mean, I know about other markets,
but just started doing this then?
Yes.
If you don't know, I'm funny. I have to throw that in.
Anything in that affordable range is extremely stable because you can't build anything in the affordable range. So if you have properties that are 30 years old, rented out, they're clean and neat, but they're not like the fancy new property with the pool and all of the stuff. Those places hold their value and usually keep a low vacancy. The ones that have struggled historically have been the very, very top end. And so when you build the very top end and you're trying to get those rents like $1,700 or something like that, those are the ones that usually soften. The one thing that I'm not factoring in is the population growth. If we have a whole bunch of population growth, and so the demand continues to climb, even though we're building a whole bunch of, units, it's not going to matter. People need a place to live. But I don't know. It's all speculation at this point.
Do you have any idea or any say on how many units, any idea of how many units we're behind and how many more units we need to get to that plateau point? I mean, we're kind of looking at the same thing with real estate, with new construction. And I mean, our inventory is so low, but we're trying to figure out about how many more listings we need to kind of even the market
balance,
out.
right?
Where's the balance?
Yeah.
So, I like to think of the 5 to 7% vacancy rate as pretty flat, pretty kind of...
We use a 5 to 7% absorption rate. It's probably the same thing.
Yeah, so
Months, yeah.
if we think about vacancy in that 5 to 7% range, we consider that a fairly, supply and demand are matched up pretty good. Right now, it's not 5 to 7%. It's more like 1%. So right now, we still do not have enough supply. We are definitely on the lookout for that to change, though, with all of the construction.
Jake, so a quick question for people who might not think they want to be landlords. Are your landlords pretty happy right now? Are they pretty happy with their returns on their investments, what they're getting, and what they're able to buy and turn into rentals? Do you feel like that there is a lot of anxiety? They're kind of like, I don't know if I want to do this anymore.
People that are landlords right now want to be landlords. So like I was saying before, the people that got stuck with their house that's upside down and they got stuck renting, they sold their house because the market's returned. And so what that means is almost all of our landlords are happy right now. Almost all of our landlords are seeing good returns. Whenever a landlord buys a property as a rental, the purpose of it is to stabilize the value of their assets, keep their savings account flat, number one, and number two, create cash flow. And landlords are creating that right now.
On this one, this was interesting because if you were thinking of buying, some people say it's not a good time to buy a rental property because the prices are so high. Is it still? Is it always a good time to buy a rental property?
So whenever we look at a purchase price, when we want to compare the investment. So if you're buying a fourplex versus a duplex, you have to figure out the ratio between the cost of the property versus the rents. That's called a cap rate. And it's just a ratio between the two. So the cap rate compressed. If the cap rate's compressing, that means the cost of the investment is getting greater. So let's say a rental property, after all your expenses, gives you $1,000 a year back. That's how much you collect. If you paid $10,000, forgive the numbers, they're a little off, but let's say you pay $10,000 for that investment, it gives you $1,000 a year. That's a 10% return. That's a 10% cap rate. Before 3 years ago or so, cap rates were in the 6 to 7% range. That means a $100,000 investment would give you $6,000 or $7,000 a year. That's shrinking. So right now, the cap rate is pushing towards 4 and 5%. There's a few reasons that's happening. If I can plan on a 9% increase in rent, so the returns are going to increase by 10%, I can afford to buy, if I'm getting too nerdy, stop me. I can afford to buy for a lower percent return. So my $100,000 only returns $4,000. I'm okay with it because I know that rent's going to increase 10% next year and the year after. And so cap rates compress. They've compressed a lot.
So I was going to have you go through a bunch of questions, but I have to send you on your way because I know you have your next meeting. And I don't want you to be late for your meeting.
Thank you.
Yes, but what I'm going to do is I'm going to have you answer these questions and I'm going to post them in the comments of this video. Does that sound good?
Perfect.
Awesome. Let's give Jake
Thanks,
a round of
Jake.
applause.
Thanks,
Thank you.
Jake.
You're awesome. Amazing.
Thank
And
you.
I want to plug one more time. Jake Durchie is owner of Jacob Grant Property Management. If you want to find out if buying an investment property is right for you, give them a call. And all of these slides came from their report on the market, the rental property market report they have on their website. You can go to jacobgrant.com and you can request this report to be coming through email. So
Very nice.
okay.